Takeover has been announced, reshuffling the UK's benchmark index following the quarterly review. Two takeover targets, Morrison's and Meggitt, will join the Ftse 100. Booted out, though, are food delivery app JustEatTakeaway.com and engineer Weir Group. But what do the changes tell us about London's stock market as it seeks to expand in the post-Brexit era? Let's pull in and bring in Tim Craighead, Director of Research for Bloomberg Intelligence. Tim, thank you for joining us. What is your assessment then of the changes within the Ftse 100?
Well, look, I think it's a football analogy is what makes sense here. There are relegations. They do happen on an ongoing basis. They just happen every 3 months in this instance, so that the index can stay current. This one's odd, though, in that the two additions that are coming in are basically driven by M&A inflated market caps, and they're almost certain to come back out again before too long. Either they're going to get taken out, or if the M&A disappears, then maybe they'll revert. But rules are rules. It just seems a bit unfortunate in this instance in terms of the nature of the changes.
Yeah, we love a football analogy, Tim. But in terms of the removal of some of these UK tech companies, you're talking about the oddness of this. These inflated companies because they're takeover targets, and then they take out, one of these cut and thrust tech companies. What do you make of that?
Well, so I guess there's a couple of elements here. Number one, taking out Just Eat, which is a pandemic play, which arguably in the world going forward will be, less so in terms of where it stands. It's not like it's semiconductors. It's not like it's telecom equipment or software per se. So I'm a little less worried about this technology name being taken out. It does serve to highlight, however, the scarcity of big tech in the UK. Germany has its software and semis. Holland has its semi equipment. Sweden has telecom equipment. It's somewhat different in that the UK has real depth in healthcare technology. And I'm curious to see how this develops over time, but it's too soon to tell. The same thing could be said in fintech. But those aren't big developing companies yet. As you said, the key is what happens longer term post Brexit. Does that help or hinder? And that one's still unanswered.
Yeah, and one of the old school firms, BHP, looking, of course, to shift its primary listing. Is it opening the floodgates, BHP? What should we read into this?
Yeah, in terms of the immediate impact on the index, assuming that BHP does leave, it still does need shareholder approval. That's going to be a much more significant impact. We've written an awful lot about the FTSE's ultra low valuation, which stems from its uniquely large exposure to businesses like mining and energy and banks. And, the commodity companies like BHP, they always trade at trough multiples on peak earnings, which is exactly where we are now, which is exactly why the FTSE is so outrageously cheap. It just has to be. BHP's departure will slightly lessen this drag and increase the relative weight to other more traditional sectors, whether it be healthcare or staples or industrials. That's arguably not a bad thing. I'm not. I do think that is an interesting, maybe more significant change to the index.
Okay, possibly a more significant change to the index. What is your outlook at this point, Tim, for the Ftse 100? That UK valuation play still attracting investment?
Yeah, it's interesting, Tom. Our view on the FTSE is relatively constructive because of its exposure to a global economic expansion that sustains into 2022. Now, it's not because of value. If you take out some of that underlying cheap sector stuff, those groups I mentioned before, the median FTSE stock is trading at 17 times. It's not a particularly cheap index if you look at the rest of the index, but it does have earnings potential that we think continues to be underestimated by consensus. We saw big revisions to 2021 earnings that haven't played through yet into 2022, that's a catalyst yet to play.
Okay, Tim Craig from Bloomberg Intelligence, thank you very much.